really glad to have all of you panel. First of all, to share our thoughts a little bit. We're in the ideas business of really sharing and investing for the long term. So these guys have been really old partners of ours for years, and we've seen their strategies played out. Especially for India, we have some rough patch 3-4 years ago, but we've all ride along well. So if you have invested in with these guys for over 5 years, you would know that the analyzed return have been great. Just counting India because you cheated. You had a really fast car this past 2 years. But a lot have happened, and Wellington, for example, couple of strategies that have performed strongly. But maybe you could share with us the market color last year and coming into this year.
Thank you for the question. I probably won't retread a lot of the same ground that was covered earlier. I think we know that 2023 was a year where most markets by geography were positive. So best performing markets in 2023 were smaller emerging markets that did well. Some emerging European markets recovering from a very difficult 2022. The US was also very, very strong. And there were obvious trends that we could see in large caps as well. The tech sector was a very strong performer. On the flip side, within emerging markets, China and Hong Kong were the laggards last year. Thailand was also among the key laggards as well due to global trade activity. However, one thing that I do probably want to point out is that there is, or at least one thing that I've noticed is in 2023, there was a bias towards quality companies. And I think that's been a trend that has been going on now for at least a decade, given that the whole world has been concerned about volatility. Companies with strong balance sheets and strong cash flows is something that gives investors a lot of a safety and a belief that their fundamentals are much better than the broader market.
And with the Fed's expectations of rates cuts coming around the corner here, what are your could you share some of the secular outlook from your perspective? Which sector or which themes should we be focused on at the current moment?
Yeah, so we really like sectors and companies where there are trends in their favor and that really benefit their core earnings, and these trends are these trends are helping their secular performance, and they're drivers of their innovation as well. So companies that really the trends that impact their bottom lines are healthcare companies, companies with a lot of innovation beneath the hood, and the tech sector, as we heard the two panels before us expound on.
I would like to just turn on to Asia a little bit because our focus have been really disappointed partly because China have underperformed a lot, but in putting the pieces together, a lot of countries in Asia have had markets that perform in the double-digit percentage at least. Maybe could you kindly share your views or a real top-down picture of what's going on in Asia?
Yeah, sure. Thanks for the question. And before I start, just thank you all the loyal kind of customers here as well for sticking with us the whole time. So we'll definitely try to get those returns over for you. So to your question, I've been hearing about the whole forum and everyone's saying about the macro and all the different areas. I think to summarize, there's really 2 points, right, that we were looking for. It's really growth, right, and also stability, right? So within Asia, right, we're really blessed in a sense, of having that tailwind already, whether it be population or whatnot. But also, if you look at it, we actually have very, very low inflation. So all these things about like Fed, hiking and or not hiking and keeping you up at night, well, we don't have that one problem already, right? So that's one good tailwind. We have great demographics. So within all Asia, right, so many different countries, so many different areas, and that's the beauty of it, is that we don't know which country is going to boom, right? And so I think it's great to have kind of the other panelists here. You can definitely share more. In India, I'm sure, is something that everyone want to hear. But regardless, the tailwind of being invested in Asia, there's definitely and you can definitely see the positive attributes of that. The second part, and then I mentioned stability, right, in terms of the macro. The second part is about growth, right? So everyone's talking about AI here, AI a lot, technology, and that's great because growth then kind of trickles down to the earnings, that trickles down to profits, which trickles down into the prices going up, right? It's pretty simple that when you look at capital markets perspective. Now, a lot of it, and the focus a lot of times has really been in the US, right? Because of NASDAQ and all the tech companies, I get that. But let's not ignore the fact that actually, if you actually look closer to home, even in APAC, and we talk about the supply chain and whatnot, they're all interrelated. Actually, if you look at markets such as Taiwan, Korea, Taiwan has around 60, the companies actually around 60-something% have exposure to AI. Korea has around 44%, which are the areas where we see a lot of that growth itself. So just painting a context there that, hey, all these themes that you hear, you can actually find it also right back at home if you really, really know where to look.
I just want to come back to Brian a little bit on valuation. I kind of missed that we were shining light on the opportunities, but could you also touch a bit on the valuation in terms of in the global picture, in terms of where what's trading rich, what's trading. I know China's now close to being the cheapest market in the world, with with the government putting a 5% growth rate to back it up. So maybe your thoughts a little bit on the valuation side of things.
Yeah, sure. So the way that I think about valuations is two angles. One is the price reflects the current concerns and optimism of sentiment of the asset class in the market, and the second is what is true fundamentals and how does that reflect reality. So on the rich side, we see the two outperforming markets over the past few years, the US and India. We can obviously transition over to our next speaker to talk about India. We're really excited about India as well, just because fundamentals and macro is so positive, so that there's a tailwind behind that. Now in the US, once you strip out the 7 best performing companies over the past 2 years, I think valuations look a bit more fair. And when we look at valuations, I like to look at long-term valuations. So I go back 20 years and I take a look at what the 20-year average is. The US is trading higher than that, that's for sure. One thing that does give me a little bit of more optimism is that when I look at the S&P and the equal weighted index of the S&P, that has actually reached new highs. So in the sense of performance for the large tech stocks broadening out to the rest of the US market, that seems to be happening, and that does reflect a little bit more of investor optimism that fundamentals will achieve a soft landing. And then on the flip side, on what's cheap, China is obviously single-digit P on such long-term valuations, but also Europe is actually showing up quite attractive relative to its long-term trend.
Okay, I'll come a little bit to India now, give you some runway to kind of elaborate. India have been a really good performer recently. For the past 3 years, the annualized returns have been top in the charts everywhere. Could you, shine light on what's going on in India? Give the audience a little bit of, I think we tried to promote India some time back, 3 years, 4 years ago. I think India used to be really uninvestable because of the currency. You would lose all the gains to the currency. It's depreciated yearly, year in, year out, without delivering a solid return. Could you paint a picture for us, Abhijit? What's going on? Where's the party at in Mumbai? And should the investors have a little bit of taste of India in their portfolio?
Sure. Thank you, Anak. And thank you, everyone. I wanted to thank you for choosing our fund to invest into the most promising market of Asia. So as Anak very kindly mentioned, currency used to be a big problem for investors to invest into India. The good news is the party has just started, and it's going to be a long party. So there are 2 things that I wanted to speak to you about. India has a $600 billion war chest of currency reserves, which we can use. So the currency will be extremely stable. At the same time, there is a discussion going on in the government as we start our manufacturing cycle in India, we want our exports to remain cheap or competitive, if not cheap. So the government is actually concerned because India this year will become part of the emerging market bond index. We expect to see $32 billion of inflow into our market. As Anak also mentioned, it is a very, very popular market where investors have made a lot of money in the last 2 years. Let me tell you a little bit about the domestic sentiments in India and why we are very, very positive on this party. So every month, the Indian domestic asset management industry sees an inflow of 2.5 to 3 billion US dollars. And all this money is coming from retail investors. Average ticket size of 50 US dollars. Quite frankly, ladies and gentlemen, we don't need outside capital at this moment to sustain this market, but it's always good to have. And it'll be very good for you because you'll get to multiply your money in a fast growing market. Has India achieved everything? There is a massive build-up required for infrastructure. EV cycle in India has just started. There are new sectors being created every day. You are used to a lot of sectors, in this part of the world. For us, our journey has just begun. And, many times I've heard this comparison when I, visit, Latin America or I visit, other parts of Asia and Europe. Everybody is talking about India where China was 19 or 20 years ago. I like to tell you that this growth that you're witnessing in the Indian market is self-sustained. We are moving from a services economy, diversifying ourselves to a manufacturing economy. Make in India is a big theme by our Prime Minister. And lastly, just to top up, the cherry on the pudding is we go into elections in the next 3 months. There is a very high probability of Prime Minister Modi's party coming back into power. And then we will see, once that happens, there will be a renewed push on infrastructure, on reforms, and many, many other things. So I think you need to stay invested and you need to top up as well. Thank you.
With that, can I just touch a little bit on the valuations in India? India have been trading, been one of the most expensive markets for back in the past have been trading rich ever since, because the markets, the number of the demographics, the young age, etc. What do you see as the game changer right now for India to, persistently continue this valuation ride, apart from the made in India and?
No, sure. So I think it's a very fair question. And I have to tell you that this is the favorite question of all investors. So every roadshow that we do and every trip that we do, this question definitely comes up. India is expensive. So I like to say that if you want to buy a nice suit, you need to pay for it. And if you want to buy, quality companies, you need to pay for it. There are great companies to invest into. Most of these companies are, not only looking at domestic demand, but are also exceedingly, expanding into other geographies. So this is a land of entrepreneurs, and you need to be invested in this market. In many ways, these companies, if you look at the average, valuation of the Indian market, we've always been perceived to be expensive. But I think the kind of returns that we're giving to our investors, it is fairly justifiable. I spoke about manufacturing. I spoke about infrastructure. I spoke about new sectors being created. All of these companies will give clients a chance to be part of an economy which is just taking off. So, I can give you a very small example. We invested in a small cap company maybe 4 years ago when we were in the second year of our fund. That company today is a large cap. So the fund has held on to that stock from a small cap to a mid cap to a large cap. And that's the kind of value creation we've done. So I think you definitely do need to keep valuations in check, but I think you also need to see the kind of returns that the market is giving you.
Sure, thank you, Abhijit. I would like to just turn to Ken a little bit to share your thoughts on not just on India, but other markets of that you see opportunities in, and there's bright spots.
Yeah, thanks. I mean, well, to be fair, I agree with everything you said, right? We have India in the portfolio, and we definitely see that growth as well. It's done well for us, too. For us, it's really about we have the whole APAC to play with, right? And, as you mentioned, and Kun Borawan at the very beginning mentioned the different indexes that can get the growth. It's great, right, to have that exposure, but we want to make sure that we keep our eyes open, right, to everything else as well. And personally, I mentioned before about the exposure, and we're talking about trends now, right? AI, technology. Well, the way I look at it, or we look at it also, it's not just the theme itself, but then the ecosystem around that, right? So how is it benefiting everyone else, right? So it's not just NVIDIA that can go up 400%, but the companies that support them, the whole supply chain around that as well. And that's being in different jurisdictions, right? It can be in Taiwan, in Korea. And so I mentioned right now, as of this point, right, we do like Taiwan, Korea as well, for different reasons too, right? We do have the China exposure as well, and there's a lot of different stories that we come. So every country might have their own different story, right? So India right now with the growth, we have China because of the valuation as well, and then with good companies. But then there might be some within the portfolio itself, right? Korea, Taiwan, that has that technology exposure itself to that. All this adds up to that growth, right, that you're looking for. And all I mentioned to you about, like, we're here in Thailand right now, but you want to have exposure to what's going on outside in the market, right, in your portfolio, because in the end, you want to have that returns. How do you get out of that, right, from a home bias to go out there to your neighboring countries? And those are where we see that here. So that's where that's where we see all the opportunities.
Not just Asia. I just want to, off script here to throw this question to Brian. There's opportunities in healthcare and technology stocks. Well, there's a panel on technology. We won't dive into it much, but maybe a little on healthcare, given the the interest. It's been one of the long-standing strategies. Any opportunities in that space? I mean, the tech took all this, the highlights in the show, stole the show from the healthcare sector for some time. But maybe could you shine light a little bit on the healthcare strategy that we have?
Sure, yeah. So if I think about the healthcare universe, you can basically break it down into three buckets. The first is the biopharma bucket, so basically medicine and therapies, and two really interesting drugs that are coming out or specific therapies that are coming through are cancer-related, which, as we know, with a global graying population, that is a big addressable market that we really need to find more solutions for. And the next one is something that has been getting quite a lot of play in the media recently, and that is the latest weight loss drug, the GLP-1 drug, or Ozempic, by its commercial name. So that has proven to be quite effective, but also helps to, or is correlated to solving other diseases as well. So that's a growth area for the biopharma industry. And then within medical technology, I can give a data point where, for example, surgical robots, they are used now in 2023. I think the latest data point is the highest ever across hospitals in the world perform assisted surgeries with their robotic arms. So less invasive, faster recovery times. This is the type of innovation that we really like to see in these subsectors that continues to show that these companies are growing, there is actual innovation, and we can sort of outgrow what the global concern is, which is global growth may not achieve the growth rates of the past. So we really like companies that are driving innovation themselves.
Okay.
If I could just jump in for a bit.
Yes, feel free, please.
Such wonderful points you made, and I just wanted to comment. You spoke of innovation and you spoke of, robotics participating in surgeries. I think I'm coming back to my favorite topic, India. And there is a massive uh, unavailability of hospital beds, not as sexy as what he said. But I'm just trying to tell you, from an infrastructure perspective, for 1.4 billion people, we are under-equipped in terms of hospitals, so we need more hospitals. And there are great private sector hospitals being built. And we've been owning them for a while in our portfolio, and they've done wonderful for us. India has the second biggest, well, it has the highest number of FDA-approved plants outside of the US. So we are big manufacturers of generics and other drugs. We are now on a cycle of, being self-sustaining in terms of pharma. So chemical parks are being built across India so that we can self-sustain and we don't need to import the base materials required for these life-saving drugs. So India exports to Africa, Asia, as well as Latin America in a big way. And we make AIDS medication very cheaply available as compared to other pharma companies from different parts of the world. So great opportunities highlighted by my colleague here, and great opportunities for you to invest into if you invest on the other side of the cycle, where the opportunity for healthcare and medical devices and pharmaceuticals exist. So
Yeah,
the pressure's on you now.
With that, I also, China and India have been competing neck on neck for, manufacturing and industrial upgrading. I think India have done a good job in terms of costs. There's slight cost advantages in India. And, how's the industry in terms of the, upgrading from an OEM perspective to the sort of high value-added manufacturing in India picture?
Thank you. I think still early days for us, but very, very promising. So 2 or 3 things to highlight. Some of my colleagues earlier also spoke of semiconductors, and some of my colleagues spoke of technology. Very esteemed, very great thoughts, very clear thoughts. We are just starting our journey. So the government has an incentive-linked program for manufacturing companies to set up assembly in India for basic electronic equipment, and we are going to progress from that assembly to other forms of manufacturing. Again, great companies in the mid-cap sector, already doing this, using this PLI scheme given by the government. I also spoke of semiconductors, and there's a colleague of ours who was on the earlier panel. He mentioned that it takes a while for this ecosystem to come. Again, we tried, and we have the highest number of engineers, very qualified engineers who work for different companies across the world, and we keep producing and producing more engineers. But we don't have a semiconductor industry. Taiwan, which is probably a state, the size of a state in India, probably my hometown will have more people than whole of Taiwan put together. But they are world leaders in manufacturing or the semiconductor industry. So we have just started the journey, and the government is now given up making semiconductors on their own. They are now inviting companies from across the world to come and set up this facility where they will provide an incentive for them. So we're going the other way. We're starting small, and we're going to scale it up to more complex technology, which will take time. But we have the people, and so there are great prospects. And for you as investors, a very, very good chance to come in early, when these companies are young, invest when they're in a small cap or a mid cap stage, and then go all the way, till you reach your financial goals, be it retirement, be it buying a new house, whatever your goals are.
Thank you, Abhijit. Maybe just back to Wellington and Invesco. Both of the houses is one of the largest asset managers in the world. So maybe if I could ask, the fund flows in terms of year-to-date fund flows, where you're seeing money going, and probably share some insights in terms of fund flows, where the smart money is going.
Want to take it first? Maybe I'll start and then maybe we can chime in. But then, for us, right, when you say smart money, I think maybe I'll break it out from institutional and then retail perspective, right? So maybe from tactical first, definitely, you see India, that's why Japan, that's why these guys are here, right? So that's where the hot markets are in the, so that is also where, whether it be markets such as Hong Kong or Taiwan, these are people are talking about it, right? And it's exactly the themes that you mentioned and you're hearing below here. Now, I'm not saying I would say be cautious, like do your own research, right, as well, when you try to invest. But I think another aspect of it too, when we talk about it, is really about the stability aspect of it, right? So within income, people still have that necessity for that. Now, how do you get that income, right? And we're talking about growth and all the markets, but how do you get that income, whether it be through bonds, fixed income, or all alternative assets? We also see that as well. So I'll stop there first.
So from Wellington's perspective, a large part of our client base is institutional clients. One thing that we do with them every year is to review their strategic asset allocation and find them tactical opportunities. So one of the goals of reviewing portfolios with our key clients is to actually look at if they have any gaps in their equity portfolios. I particularly look at equities, so that's of particular relevance. One of the trends that we've been noticing is for clients who are under-indexed to equities, you find them shifting closer in and closing the underweights to their core equity portfolio, or even raising that exposure based on their long-term outlooks. So we try to assess their long-term investment goals as well. From a tactical perspective, we're finding a lot more opportunities to engage with clients on Japan, small caps, both global as well as US, and then finding opportunities in Asia, like India, for example. And I think there are also specific challenges that clients are seeking to address in investment portfolios, whether it's thematic, the environment, or also innovation. So I think many of the topics covered here today are particularly relevant for even the biggest strategic asset allocators in the world.
I think apart from the Asia strategy, where the clear risks have been seen that China is a drag on the portfolio, maybe we'll just start from India and then we'll go to Wellington in terms of what are the key risks right now for investors looking to invest in your, in India or the global equity franchise or healthcare in particular.
Sure. So I think the small and the mid-cap category in India is heated up at the moment. And we're seeing some corrections happening as we speak. You need to be very, very selective when you look at small and mid-cap because it can turn around for you as an investor. Remember that these companies are not well researched. They're under-researched. Their management is not as savvy as some of the other managements for large cap companies. So you really need to have on-the-ground research to know exactly what you're investing into. In a country like India, if you look at the small cap index, there are 800 companies listed on the small cap index. If you look at the total market, there are 5,000 companies listed in the Indian Stock Exchange. Maybe the top 150 or 200, maybe large and mid cap, which will have credible research. So really, the good news is you need a local manager. Both these gentlemen are great at what they do, but you need me because I have the biggest on-the-ground research team. I can pick these ideas. I don't sit in I sit in Mumbai, and we have 28-member team of analysts and fund managers who are looking at this sector. So you need to be in safe hands.
That's a really great pitch. I don't know how Brian could come back after that pitch right there.
So we're talking about risks. From my perspective, looking at global equities, I really agree with Abhishek's point, which is to really assess the partners that you really trust your money with. So to look at their franchise, to understand how they invest, to understand their active edge, their research edge, right? So that goes back to, I guess, what all of the panelists have today, and to really mirror what they do on a professional basis with your own investment goals. And as we sit here in 2024 with markets performing the way that they did in 2023, I think a key risk is exactly that, which is volatility. So don't chase the market and don't overextend yourself for the volatility that you are prepared to bear. Because as previous panelists have also stated, stay invested. But if volatility throws you out of the market, that's probably a bad outcome. So, find an investment approach with an active manager that you trust, that you can deal with volatility together with, and I think have that long-term outlook to achieve that and to not look at each year on a short-term basis.
Ken, you want to chime in?
Yeah, so I forgot who quoted this, but I think that someone said there are no bad assets, bad prices, right? So from us, our perspective, at Invesco and this fund managers, they don't like overpaying for things and that's just our philosophy, right? There's no bad assets, only bad prices, that's what you pay for it. And that philosophy for us is really the point and entry point that you buy something has to be justified, right? Whatever it is. So the philosophy applies to this fund, right? If it goes up, buy low, we sell high, right? And that philosophy is very, very difficult to do, right? But I think that's one of the biggest risks, right? It's just to potentially, we're talking about trends now. Follow the trend, absolutely, right? You don't want to miss out. But sometimes there is an aspect of it where you have to really evaluate the price that you're buying at, because that has a very, very clear positive correlation with the returns that you're going to get in the future.
I know we're not trying to predict any returns or price level, index level, but maybe we'll leave Abhijit out of this one because he's an Indian bull forever. So maybe from Ken and Brian's perspective, your best ideas or asset class that you would like to, you're seeing interest or opportunities, other than you don't have to be in Asia or anything, but ideas that you see as a good opportunity.
Being in an Indian bull over the past 20 years has not been a wrong decision, by the way. It's the
Correct.
best performing market after the US on a 20-year rolling period. So you're in good company.
Yes.
I do really believe that companies that control their own destiny, that have a fundamental tailwind, both from an industry perspective, a technology perspective, so healthcare and tech, fundamentally believe that, and companies that are well geared with safer balance sheets, quality businesses, and strong cash flows are the way to play this cycle. You probably don't want to be in lower quality companies. One of the big lessons learned in the 2022 weakness was that there were many speculative companies around, even in the US, that were unprofitable, that weren't earning any money, and that evaporated once cheap funding went away. So we're in a new regime. I think it's a good time to relook at your portfolios and to align yourselves with such stronger companies.
Yeah, I mean, there's so many ways I could go with this, but I'll just end the way I started, right? Just simple growth, right? Where do you see that, right? Even if you go to the U.S. with NASDAQ, there's a reason why it's justified. Since a colleague here, the reason why India is justified, potentially justified, how those earnings continue to deliver that growth. But where we want to be in, and this is not where, it's like if you look across, right, where is it where you have growth, not just within the countries, within the population, where the infrastructure, they need help, they need capital to be allocated, right? And from the regional perspective, how you can tap into that growth, I think I'm okay with that. And I think that if you look around the world, right, where do you really see that, right, apart from Asia? It might not be one region, and we're happy to see that India right now. It might be another region, Vietnam, Indonesia, next, right? So it's an exciting place to be, but we just want to tap into that growth, and I think that's where the long-term opportunity is.
That's a good note because given the current Thailand GDP is growing at around 1.8, 1.7, 1.8, it's pretty much a time to look at opportunities elsewhere, especially within Asia or the global markets itself. So back to Abhijit a little bit. No more India. Any asset class you want except for India. Any ideas on on market, you can say China.
Yeah, sure. India, India, and India.
All right. Now, I think we got the right person for India. So if you see Abhijit walking outside, please do approach him and ask him in more details on India. He's a real Indian bull, and you know, I think you would be more comfortable investing into our B Parata strategy with you, right?
Thank you very much.
Yeah. I think with that, we'll close it off there, and we'll give back some time to the audience. And thank you very much for being here. Much appreciated, and look forward to the afternoon session in more details of the strategy. Gentlemen, thank you very much.
Thank you.
Thank you very much.